All right, let's get to our senior economics reporter, Steve Liesman. He's got the results of CNBC's Flash Fed survey. Steve, take it away.
Hey, Becky, good morning. Yeah, in the wake of that U.S. China trade agreement, we wanted to see if things had changed. And respondents to a CNBC Flash Fed survey have dialed back their inflation and recession concerns, but both remain elevated. And policy uncertainty continues to be pretty high. The 34 respondents, they include fund managers, strategists, and economists, put the recession probability at 41%. That's down from 53 in April following those tariffs imposed by President Trump. But concern about a recession remains above the 36 you can see there from March, and it's nearly double where it was in January. Compared to March, the growth outlook is a touch better at 1%, but that's still weak. The inflation forecast is high, but better at 3.1%. You can see just down a little bit on the CPI. Unemployment, a touch better, 4.5%, still elevated from the current level. Forecasters, they have low confidence in their numbers. More than 80% said they were uncertain about the outlook for tariffs and their economic impact. John Donaldson from Haverford Trust puts it pretty succinctly. The volatility of policy proposals, reversals, and restarts results in less confidence in all of my responses. In almost every case, there's a possibility of giving an entirely different answer in the next 24 hours. Forecasters also beginning to focus on the impact of fiscal policy. 70% saying proposed deficits in the current budget bill in Congress were larger than they had previously expected. But a 36% plurality saying the bill makes them more optimistic about the economic outlook. 39% said it made no difference, and 26% actually more pessimistic. A majority say the recent tariff reductions on China will have no influence on the Fed. 32%, or about a third, believe it makes rate cuts less likely this year. So the average forecaster now looking for a 3.9% funds rate by year end, a bit more hawkish from May, but that's because the economic outlook, especially on the employment side, brightened just a bit. Becky?
Steve, I think what jumps out at me the most is just this idea of a forecaster saying, look, the picture could be completely different in 24 hours. I think that volatility is what we've seen reflected in stock markets, too.
I have some of the commentary in there suggests that the uncertainty is maybe the worst part. One of the people who wrote, one of the respondents wrote in saying that if the policy was known, people could plan and the economic impact of even a bad policy would be reduced. It's the uncertainty. Another person wrote in and said, we don't know what happens when this 90-day period is up. And it's also unclear to a lot of companies, which, by the way, I'm going to try to do some reporting on here at the CEO council meeting in Tucson here, which is they don't know what tariff they're trying to get around or how long it'll be there. And, of course, there's a lot of really interesting stuff that I'm reading, and you guys are reporting about how companies are responding. One company says they have to raise prices, another says they'll hold the line. And then I think that sports thing that Andrew just read is fascinating, that they're going to find a way to manage through it all.
Yeah, I would argue the uncertainty is probably worst for hedge fund managers, for the economists, all the people that you were surveying in this, the strategist. If you're a business owner, you don't like the uncertainty, but I think you would take this uncertainty over the certainty of 145% tariffs coming from China if you're sourcing your stuff from China. Probably depends on where you sit for those perspectives.
That is very true. When it comes to that, I'll take that. And that's sort of what the this conflict that's out there, which is, on the one hand, you're a lot better than it was before. On the other hand, several respondents write in, hey, 30% is still pretty high. And then there's a question which I have to get to the bottom. Maybe you guys know. Is it 30% or is it 30 on top of the prior 20? Is it actually 50% on China? And if you didn't know about the 145, you'd say, that's pretty high. That's going to be a big negative for the economy.